If you're tired of going through so many different videos to learn how to trade options, then you've came to the right place, because in this video, I'm going to teach you guys how to options trade profitably from start to finish. Starting with what exactly is options trading. Now, options give you the ability to buy 100 shares of each ticker. For example, if I wanted to buy 100 shares of Tesla, I could buy one contract that allows me to buy 100 shares at X price. So if I buy 405 calls, then I'll be able to purchase 100 shares of Tesla for $405 a piece. Now, when I first got started, I was like, what is that? How does this apply to me? And this is very confusing. I also thought when I first started trading that if I was going to buy 405 calls, the stock needs to go to 405 for me to even start making money. And that's simply false. I'm here to give you guys the information that is needed to actually options trade. And knowing how these options work, options is just the vehicle to get us from A to B. Basically, in simple terms, it's leveraging the stocks that we're already trading. For example, if Tesla goes from 405 to 406, I'll make 0.5% if I was actually trading shares. Now, for example, if it goes 405, 406 and I'm trading options, I can make 10% from 405 to 406. 10%. So to recap, options trading is basically leveraging each and every single stock. So instead of me making 0.5%, if I was going to trade shares, I can make 10% on the same exact move. How do we trade these options? What brokers do we use? There is one broker that I've used for years now, and that's something called Thinkorswim. There's others out there like Interactive Brokers, there's Webull, there's Robinhood, but I like to keep it simple. Thinkorswim, as you guys can see right here, is exactly what I use. At first, it's going to seem super hard to navigate through this whole thing, but like anything else you ever done in your life, things take time to fully understand and grasp. I'm telling you, this probably took 2 weeks to fully figure out, and then I was good to go. Do not get intimidated by this software whatsoever. And if you want to make your charts look exactly like this, let me go over a little tutorial. As you guys can see, there's this beaker icon, and there's also the settings icon. I'm on the 1 minute chart right now. The settings icon, we're gonna go here. Overlap volume. People are like, why do you not have volume on your screen? I'll go over that in a little bit. But for right now, I use something called time of sales instead of volume, which is basically the same thing, but better. This is my settings right here. Then I go to appearance. As you guys can see, I fill these up, change the colors if they're not changed already. Get rid of this grid. I do not need a grid. Change the background color to black. Then I go to equities. Instead of show volume subgraph, I have that off. I usually have this off as well. Highlight extended hours, and boom. Now you guys can come down to here. You guys can see this icon right here. You can move this back and forth. We can zoom in. You guys can make key levels like this. If you guys need to edit it, you right click it, edit properties, 405. Now, if you guys want to create lines like this, where it has an arrow, you went to there, you right click this, edit properties, color, style, width, and then you guys can see arrow type. You hit OK. And if you want to save this for every single time you do it, you just save as default. For example, if I want this defaultly orange, save as default, go here, everything's orange. But if I want this to be blue, for example, like I had it previously, we go here, make this blue, save the default, and now every single one is blue. If you right click the whole entire thing, clear drawing set, you clear everything. How to execute on here? You guys see on the right side of this, you guys see active trader right here. You're gonna click that, move this down, and I execute everything on DAS, which I'll talk about later, but this is how I used to execute when I first got started. Auto send, you wanna make sure everything's auto sended. We don't wanna get in and we have to confirm that we wanna get in. No, if I click the button, I wanna get in. Some buttons that you guys wanna use, I mark it every single time that I get in. So if I click one, buy market, this will buy one share of MSTR, for example. If I switch it to Tesla, it will buy one share. You might be like, Linder, I'm here for options trading. I'm gonna go over how to trade options with this active trader in a second. Right now, we wanna make sure that all of these are on here, right? You guys can screenshot this, whatever. Buy market, sell market, cancel, reverse, flatten. This buys, this sells, this cancels all orders, this reverses, you don't really need that at all, and this flattens. So this gets rid of, if you have an open position, flatten it or sell market, either one works. You guys can also change the quantity in your actual trading settings as well. So you guys can have the buttons right there, or you could just go be like 50, and then you could buy market like that. Now, how do we make this into an options trading? You guys see this thing right here. You make two of them. Get rid of that. Let's type in Tesla, for example. And this is what the charts look like before it gets landified. Now, active trader, get rid of the chart, boom, now we have two. Move this back over. See this little middle thing right here? You move it over, make this a little bit bigger, auto send. Now, instead of it being Tesla, we could change it to options. Look, options is right here. Make this Tesla, one of these. Now we could trade options with that. Options chain is also right here. Take a look at Tesla. As you guys can see, options chain, You go here. Now we have the options chain right here. Now what you could do is link this to one. For example, let's just say one. And one of these, you could right click this. Then you could send to one, and watch this. There's your contracts. Let's say you want to get NVIDIA contracts. NVIDIA, we're in the ones. We go here, right click that, send to one. Look how fast you can do it. Boom, now you can buy. Move this down to make it look better. Let's do one more. SPY, right? We're in this options contract, right click that, send one, boom. You buy like that. Now, how do we know what contracts to buy? Well, let's take a look. Let's go to NVIDIA, for example. And this is how I buy every single contract that I've ever taken, right? Let's get rid of this active trader. Let's make this a little bit bigger so you guys can see the entire thing. Let's make this 10, right? What I like to look for, and let's go to the 20th just because we're about to expire. The technical terms behind the options contract is I like to look for 0.4 to 0.6 delta. And if you guys don't know what that is, that's called something called the Greeks. And you guys really don't need to know that, especially for how I trade, because every single time the Greeks are in the right spot when we are taking contracts in the middle area right here. So let's make this smaller. Contracts in this area will have delta of 0.4 and 0.6. And again, if you don't know what that is, you really don't need to know that, right? I don't need to overcomplicate it. But 0.4 to 0.6, around 0.4 to 0.6. That's all you need to know. Now, what I do look for is volume, right? Volume in this area. What has the highest volume? Also, when I'm trading SPY and Qs, I want to make sure it's over $100. Well, Lander, this says $2.50, $3.50. This is times 100. So 3.5 is actually $350. 2.7 is actually $270. So I always look for over $100. The other thing I like to look for is what has the most volume in that area, right? Around that middle area, which is technically called at the money or in the money or out the money. Now, out the money is strikes that are above price for the call side. And if you guys don't know what calls and puts are, calls basically means that you want the stock to go up, right? So if I'm taking a trade, let's say 435 to the upside, and I think it's going to keep going higher, for example, I'm going to take calls. Now, if I think it's going to go lower, this is how you can make money on the downside. You can make money when the stock's going down by getting puts. So if I get puts at, let's say, 434, and I think it's going to go to 433, I can get puts, and every price below that, so for example 434, so if the stock is at 434 and it goes to 433, every strike under that, which is this, would be out the money because it's not there yet. At the money is when the stock is right at its strike price. For example, Tesla is right around this 431 area, which is right in the middle of this. So this is at the money. Out the money, since it's not below 430, is all of that. Out the money for call side is anything above 431. So 432 and a half, these are all out the money. We want to find at the money right in the middle of this area. Then we want to look for the most volume. So if I was going to play an upside trade right now, I would take 430 calls. I want it to go up. My trade plan tells me to get in because I think it's going to go up. I would see what contracts look the best. I would see where the volume's at. 46,000 volume versus 9,000. I'm going to get in there. 430 calls. It's right at the money. Technically, it's in the money, but it's at the money right here. And that's when I would enter with those calls. The reason why I want to make sure that we have a lot more volume is because I want to be able to get in and out as soon as possible. If I'm getting in a contract that has very little volume, that means there's lower liquidity than the other contracts. I want to make sure these are liquid enough for me to enter and exit as soon as possible. So now we know what contracts to take. Let's take a look at an example real quick so we can fully grasp what we're talking about. NVIDIA, for example, if I'm going to enter on this move to the downside, I think it's going to go down. I would get into puts. As you guys can see, puts right here. I would go to the most liquid contracts right at the money, which is 25,000 versus 16. I would get in here. It's right at the money. This also is over $100. I would enter with those contracts. And all you do, right click this, you send to one, and your one's gonna be the active trader, and boom, you click enter. This is how you get into it. And all the sends there, you're in like that, you could sell like that. So now that we know how to take a trade, where do we take a trade at? Because it's not so, oh, I think it's gonna go down, so I'm gonna enter. Oh, I think it's gonna go up, I'm gonna enter. No, it's way harder than that. We have to go through every single step of a trading plan for us to execute. Now, the first step is identifying what strategy you're going to be trading. Now, for this example, I'm obviously going to use my own strategy. Now, the first thing we need to know is what is our position size, what is our risk, and how do we manage all that? So let's say our strategy tells us at most we're going to lose is negative 10%. This is my exact strategy. If I know I'm going to lose negative 10%, how much money am I willing to risk on each and every single trade? Now, it's not your position size, it's how much am I willing to lose on this trade if I'm wrong. Let's say, I'm starting out, let's say at most I want to lose is $100 per trade, right? Could be higher, could be lower. That's the most that I would do if I first got started. Less is best. Now, this would require me to have a position size of $1,000. That does not mean I'm risking $1,000. What I'm risking is this. If I lose 10% on a trade, I would lose $100. So now we figured out our risk was negative 10%, which is $100, because our position size is $1,000. So now if I had a position size of $1,000, every time I take a trade, I'm only going to lose $100, which is at most I'm going to lose. If I had a position size of $2,000, that means I'm comfortable losing $200 per trade. You have to think about your risk before you do any of this. If I'm comfortable losing $500 per trade, which you should never if you're first getting started, but let's say you're at a point where you're able to lose $500 per trade, my position size is at most $5,000 because I know that my risk every time I lose is negative 10%. So now we know our position size. Now we know our risk. Our reward is going to be at least a 1-to-1 risk to reward. Where do we apply this knowledge at? And it's starting with the strategy. So my strategy is breakout momentum scalping. The way that this works is I could be in and out of a trade in less than a minute, right? I'll make 20% in 1 to 2 minutes. It's a faster paced way of trading, but it's not as fast as a lot of people think it is before they start. Because once they start the strategy, they realize that it's actually not that fast and it's perfect for them. But a lot of people get scared when they first hear this or first see this and they're like, oh, this is way too fast for me. It's not. I mean, you guys saw how quickly I was able to put the contracts up. You don't even need to do all that. You just have the contracts ready to go. All you do is click buy once our parameters are hit, and then you can just click sell once your parameters are hit. As fast as you click a button is as fast as you can get it on the way that I had it set up. But let's go over the strategy. The first step of the strategy is our key level. And what is a key level? It's just a price point where price is reacting at. And if you're new, what does that even mean? If price is reacting at a certain level, that means that it stopped. As you guys can see, it kind of stopped here and then had a reaction. It bounced off of it. See how it just went crazy? Because it was able to break out of a key level. And key level 412, for example, what happened when price got above 412? We went up $18. What happened when price bounced off of 415? We went up $20. So seeing all of these reactions will help us identify where we could place trades at. The more reactions, the better. See how price came down, bounced off 415, came down, reacted, and bounced off 415. I would be interested in taking this to a downside level. And you must be like, oh, well, if it bounced, why wouldn't it just bounce again? It can, but here's the thing. This leads us to step 2. In order for us to play a breakdown, right, which is a breakout, we need to see a ton of sellers coming in this area versus previously. And how do we see that? If you could see what buyers and sellers are doing at specific price points, then you'll be able to know if this is going to bounce or break down. Is this going to break out or is it going to reject, right? As you guys can see here, it rejected. You could see all of that based off seeing real-time buyers and sellers, which is why I have no indicators on my chart. If I could see what buyers and sellers are doing real time, you'll know what it's going to do at that level once it's at that level. For example, if there's a ton of sellers coming in at 415, do you think it's going to bounce? Versus previously, if buyers were coming in at that 415, do you think it's going to go down? No. Buyers are holding that area. Sellers, if they coming down here and are coming in crazy, then we have a very high probability of continuing lower. It must be like, okay, how do we see where buyers and sellers are doing at a certain area? This right here is time and sales, aka the only indicator that I use. This is showing real time buyers and sellers coming in. This is the reason why I'm profitable, is because I'm able to see buyers and sellers coming in real time. Now, this is a software called DAS, but you could use a free version right on your Thinkorswim. This is also the time and sales. Buyers and sellers coming in real time. Now, I don't go based off the color. I go based off 2 things. aggression and velocity. How fast are these orders coming in, and how aggressive is it moving in one direction? For example, you guys can see on the bid and ask, the ask is at 920 and the bid is at 78. We're not going anywhere. We've been at 919.78 forever. Same thing here on the ask. We're at 920. We're not moving anywhere. There is no aggression and it's slow. We're starting to pick up a little bit, but this is not anywhere near what we want to see when we're taking a breakout. But just know this is the only indicator that I use. I'm not going to turn this into a whole time and sales lesson, but what I want to show you is the aggression and velocity that I'm looking for. And this is how it helps us with trading. Look how faster this is moving, right? These are all the market orders coming in. And if there's a ton of market orders coming in, the way that I trade, there's a big wall sitting at 135, for example. Now, these are all limit orders waiting to be executed. The reason why breakouts work so well at these certain levels, like for example, that 415 that I showed you, was because there's so many orders waiting to be executed that price is not able to break above or below it. The reason why we're looking at this is because if price wasn't able to break above it, it wasn't able to execute all those shares at that specific price point. What needs to happen is we need to see a ton of market orders coming in for us to be able to break out of that 135. That's why I look for the speed. That's all market orders coming in. I also want to make sure that the speed is not in the wrong direction, which is why I look for aggression. I want to see it hit 134.80s, then 134.90s, and just keep going up and up and up as fast as possible. We're at 98, 99. Look how fast this is. 20s, 30s. Look how fast that is, right? It broke out, and this is one of my students' trades, right? Look how fast it broke. That right there broke out 30 cents, and look how aggressive it is. Right? We were at 135, then we were in the 10s, 20s, 30s. Look how fast it is. And he's already up 7%. If you got in at 135, you would have been up 20% because I took this exact trade. Look how fast that went. That's exactly why I use this and nothing else. He also has no indicators on his chart. And as you guys can see, ready? 30s. Now we're in the 40s. Now we're in the 50s. Like, look how fast it is. And he's already up 13%. That is basically how you can start to trade options. Make sure you guys subscribe, leave a like, and I'll see you guys in the next video. Peace.